Good morning for this Tuesday, January 7th, and boy, everyone's getting rocked over here in the northeast in the weather. We are at negative 40 degrees below zero today with the wind chill factor. So the weather is just freezing here. So, all right, let's take a look at the trade GLD, right? The Spider Gold Trust. This is a 5-minute chart showing you what happened yesterday, okay? A 5-minute GLD chart, and then we'll flip it on a daily after we take a look at the 5-minute chart to see what happened yesterday. If you recall, on yesterday's video, we used a trailing stop at 118.49 to take us out of the rest of the position. Okay, if you recall, we went long at 116.05. On the way up, we took profits at, like, first profit objective was 118.15, right? And then 119 on the way up. And then after taking the first two profit targets, we trailed the stop up. And that trailing stop, if you recall, was 118.49, which was 10 cents below the prior day's low. And yesterday there was some news that really knocked the market here at 10:15, knocked the market to 117.17 right down here. And our sell stop was sitting right in here at the 118.49. Knocked us out and came right back up. And look at this, the market's opening up lower today, right? So actually, this is where it closed, about 119.49, and opened up today at 118.51. So let's put this back on a daily chart and just refresh your memory here on what we did. So this is a daily chart. Obviously, the trend has been down for quite a while. Market testing the low put in place back in June. It was tested once here, and was it December? And then tested it again here December 31st, the last trading day of the year. The market tested this low and rallied pretty nice. So it was a nice trade. Again, we bought that at 116.05, right where I put my cursor, right there, 116.05, right in here, and took it up. Nailed that 50 exponential moving average. Look at yesterday's high. Yesterday's high was 120.39. Before I go any further, though, I do want to mention Doc is having a webinar this Saturday. It's on Fractal Energy. He's been talking about that for months and months and months. This is the URL. Just go to tradingconceptsinc.com/fractal-energy-trading, right up in here, right? tradingconceptsinc.com/ right? Spell out fractal, right? -energy-trading/. And it's going to be a great webinar. It starts at 1 o'clock, and very highly anticipated webinar. Again, he's been talking about this for ages, and he's got an entire class worked out for you there. So visit that link and sign up for the class on Saturday. So again, gold is at 118.40 right now. I would be looking for, we've hit resistance up in here. I wouldn't be surprised if the market came down again. Now, do we actually test these levels again? I don't know. If we do test those levels, I would be looking at it for a potential buy, but be very conscious of the fact that if we close below these lows, we definitely, gold could continue moving lower, of course. So if the market is able to come back down and test these levels, of course, I would be looking for a bullish price pattern to not only define my risk on the long trade, but to trigger the entry. So I just don't want to be buying it automatically. I'm going to look at it very carefully down in here to see where it closes. And if it's not able to close below these lows, right, the 114.46, if we can't close below those levels and we get some type of bullish price pattern, I will be looking to be a buyer. Okay? Let's take a look at the overall market. Let's just take a look at the E-mini S&P 500 on a daily chart, right? Again, this is, look at 2013's high right there, made on the 31st. And so far this year, right, first trading day of the year on the 2nd, right, 3rd, 6th, and then today. So we're trading down a little bit, not that much down. I know this market is extremely overextended. Yes, it is. Yes, the probabilities definitely favor that the market will make some type of pullback, some type of correction. But I do not want to get in the mindset that the market has to come down, okay? This market could definitely bounce again. Again, I remember back to the years 1995 to 2000 when the market continued moving higher, continued roaring higher like we saw last year. And you know, you'll miss out on great opportunities if you're in such a bearish mode, in a correction mode. Yes, the probabilities favor that we will correct somewhat. Now, how much, I'm not sure, right? Nobody knows. But I can say I would love to see the market pull back into this area somewhere where I'm drawing, right here, right? 50 exponential back into the gray action zone. So, you know, yesterday we did make a lower low, right? We took out Friday's low, Thursday's low, but we closed right here. We've opened up higher. So I want to see if today is able to take out yesterday's high, right? The 1832.5, or if you use the ETF, let's say the SSO. You hear me talk about the SSO, right? It pretty much mirrors the E-minis, but it's an index fund. It's an ETF. It's a ProShares Ultra S&P 500. If we're able to take out yesterday's high, which is 101.28, then I would think we're going to try to test that 101.87, right? The yearly high, this yearly, right? The yearly high is right here, and then potentially test the all-time high of the 102.56. So penetrations of prior days' highs and lows are very significant to me. All right, so that's what I'm looking for. Again, go to and watch. This is a great educational video too. Doc's video is phenomenal. It's about an 18-minute video. Just again, right here, tradingconceptsinc.com/fractal-energy-trading. It's a phenomenal video. You'll get a lot from the video alone, and if you want more, simply sign up for Saturday's class. All right? Again, it's this Saturday, January 11th. Hope to see you there. Bye for now. Have a profitable day. Be back with you tomorrow.